some of you don't know me, but there are enough on here that do. So the quick 30-second version, just in case, is started my first business when I was about 23. Got a year in and had 60 guys and girls working for me, or men and women working for me, most of whom were old enough to be my mother or father, which of course brought out the imposter syndrome fairly quickly. Didn't take me long to work out. I didn't have a clue what I was doing. Fortunately, none of them ever worked it out, but I certainly did. And I went out and got my first coach. I have a colleague on the course today that I've known for 35 years, Rich Marsh, if you've met him, he's a lovely guy. Who was involved in the Dale Carnegie program. I did that. That was my first business training exercise. I absolutely loved it. I ended up being a Carnegie instructor for 12 years. During that time, I built 4 other fixed businesses, 3 virtual direct sales or network marketing businesses. I built a design business, a property business. I had training coaches. I trained about 8,000 of them. I apologize, but I did. One of those went out to Australia and met my then partner in 2003, a guy called Darren Sherlaw. Some of what I'm sharing with you today is his ex-funds management quant mathematic calculations of why businesses grow in certain ways. I added the entrepreneurial side to his funds management mathematics, and we built a business called Sherlaw's. A lot of the IP I'm going to share with you today is Sherlaw's. We'll acknowledge where it comes from. I'm still a shareholder in the Sherlaw's business, so I'm part of that world. And we launched that in 2003 in the UK, 1999 in Australia. We went all over the world. We were coaching in 36 countries. A recession hit us the same as it hit everybody else. And I spun out when we changed the central model and shifted to strategic growth for enterprise, because I wanted to use other IP and I couldn't damage their brand by using different intellectual property. We still use the Sherlaw's intellectual property. We're still all fully trained to do that. So if you want any support using that, just shout. So just 30 seconds of my background. That's Nick, 30 seconds, by the way. So what I want to do now, quick agenda. Want to have a bit of fun here. So post-Armageddon, what's going to happen? We have a picture that's not quite as dead as mine. I took a picture of the A3 on the bank holiday Sunday, which you would normally expect it at 5 o'clock. So everybody rushing back into London. And I was on a bridge. There was not a car, vehicle, or motorcycle in either direction. It was the eeriest, weirdest thing ever. But it really did feel like, you know, post-zombie apocalypse. So what is going to happen when we finally get the vaccine out there? Market observations, insights, what's happening generally. Everybody jump. One of my favorite pieces of music when you want to get really excited. But why a jump strategy is the right way to go. Why size matters. That's a different subject to what you were thinking it was. And get the hell out of Dodge. You know, what do we do when it's time to sell our business or time to build an exit? If anybody has anything else they want to talk about, the idea is flip it through on the chat. Julian will interrupt me, etc. Everybody okay with that so far? Cool. So what I'd like, if you could switch your mics on before we shoot forward, is could you just tell me some of the things that came up in your chat room as the top 3 things that people are focusing on?
I'll say first, if I may. So we have room 5. We had keeping the lights on, I think was an interesting major one.
Yeah.
Second one was looking for new business and communication with clients, adding value. And the third was protecting future revenue and sort of effectively closing those opportunities when they come along.
Yeah. So just checking in quickly. I normally do this on round table type stuff. So how many of you would like more business? Hands up. Okay. How many of you would like less business? Good. That's nice. I used to get the people say to me, if we could get rid of all those clients and all those staff, this would be a really easy business to run. But the truth is most people are looking for more business. I just want to give us what happened in their room, kind of things that you're after. Keeping the lights on, I'm assuming we all want to do that. Okay, Gareth, do you want to jump in?
Yeah, so for us, it was sales and growth. So again, future pipeline. One was also kind of company culture. How do you manage staff, again, remotely, and the whole, everyone working from home at the moment and have a good company culture. And then lastly, it was just being COVID safe. How do you reopen and manage your teams in a safe environment, protecting your employees and your clients?
I'm certainly hoping that's going to be a short-term issue that we're worried about as business owners, but it is definitely top of people's mind right now. Safe and profitable, or safe and break even in a lot of cases. We've been lucky in that we don't deal with a lot of pubs, airlines, holiday home businesses. We tend to deal service industry. So it's been fascinating. Quite a few of our clients have actually done better during COVID, quite considerably better. One or two manufacturing clients that we're working very closely with and have been for 2 years have absolutely smashed it during COVID. Even when they had to shut their factory down for a month, they've picked up additional work as a result. China came back nice and quick for one of them. So, it's been fascinating, the winners and the losers. We're going to look at some of that, bit obvious, but yep. Somebody else, another group, just whip your hand up so I can see you are. So Sean, yeah, and then Ben.
Yeah, the main three in our group, Nick, were strategy, new business growth, and culture were the main three.
Yeah.
Then some of the others were driving initiatives, developing the best results for clients.
Yeah, look, it's quite fascinating. I'll tell you a funny story. When we started doing this 25 years ago, if I said culture to a law firm or a high-level consultancy practice, they used to literally look at me like I was smoking my own socks and go, "Oh, we're not going to start hugging trees and singing Kumbaya, are we?" And it's funny that one of those, what I would call very hard commercial lawyers, who's actually a really lovely guy, one of our clients, rather amusingly was sitting there with this wry expression on his face, and he said, "When you first told us culture," he said, "I did have a bit of a what?" He said, "But I've got to tell you, over the last 6 months, the 3 words and the behaviors that came out of our culture exercise have been absolutely what's helped us run the firm over the last 4 or 5 months." And one of our clients said to us, "Culture's not one thing, culture is everything." It is going to be the single thing that will bring us through this. It's why businesses stay together for 10 years. It's why partners stay together for 10 years. The stats today, if you really want to know, just Google value of culture in my business, and there is report after report after report, real stats now, not the opinion-based stuff that was around when I was first doing this. Absolute stats, 10% increase in value, 25% faster growth, 500% increase in sales. Like, it's stunning the numbers you get if you get your culture right. If you aren't doing that at the moment, you want some help, just give us a shout. We'll come and show you how to do that, because I think that's one of the things we do particularly well. So somebody else, Ben, you had your hand up as well, and then we'll move on.
We had margin, marketing spend, growth, overhead, vaccine, mental health, particularly of staff, process, culture and values, and flexible working.
So your group had their Weetabix this morning. That's good, and I'll proper copy it up. Jules.
In terms of the votes, I've just done a very quick analysis. We had 6 votes, nominations for culture, 6 for sales and marketing, 5 for strategy and business planning, and only 1 vote for COVID.
COVID, yeah. Here's my zombie Armageddon. What are we doing after the zombie apocalypse? Here's the losers. Not going to spend a lot of time on this. This is just for you to have a look at. It was pretty obvious, some of these. Go on. Everybody okay with that? If you're on a phone, some of this is going to be a bit small. I apologize. I probably can blow it up. There you go. I can do if we go. I'm trying to keep this as manual as possible. It's not a standard slide deck presentation. I'm actually sharing my desktop with you because it means I can jot about and move things around. We expected to see manufacturing. I was surprised IT and telecoms was a loser. I expected that to go great. One of my close friends' son-in-law works for Zoom, just bought in about 6 months before COVID, so absolutely smashed it. Retail, obvious, etc. So hospitality and leisure going to get smashed. I'm surprised it was as little as minus 54%, but shouldn't be any big surprises there. If you're in one of those sectors, you have my sympathy. Winners, again, pretty obvious. I thought that was quite amazing which ones have actually shot up. Ocado was going to be a no-brainer. If you could have got in February and bought Ocado shares, you'd have smashed it. I've just here my favorite stock, my favorite person in the world right now has just become the second richest, young Mr. Musk at Tesla. And if you got into Tesla stock when they were 240, then you're doing okay, etc. So winners and losers. Balance of it all, an 11% drop. The balance of everything was 11%. Do we think that's reasonable? Based on what's happened, I would have said that wasn't a bad result if you only dropped 11%. just want to look at some of the stats. Look, you can go and get your own. I'm not going to spend hours on this, but you know, that's pretty expected. There's the announcement of the vaccine. So instant jump. Imagine what's going to happen when it actually starts getting rolled out. So March next year, what's likely to happen? And you'll see from the economic reviews that we do, some of you have seen through this before, that there's a good chance that the world's going to explode and we'll be off and running. We'll see who recovers. Here's COVID in context of all of the other issues. Now we've looked at all sorts of crashes. There's your 87 crash down here. Black Monday, that was horrific when it happened. People were jumping off of buildings and causing all sorts of problems. Dot-com bubble was actually almost as bad as the financial crisis. Yet you wouldn't have known that when you went into the financial crisis. They called it a Great Recession. It was actually worse than the Great Depression. Great Depression was 4 quarters of negative growth. The W recession was 6 quarters of negative growth. It was the worst crisis ever in the history of our economy. And yet, where did we go from there? Straight up. And Brexit smashed it a little bit, and COVID has given us a bit of a kick in the shins as well. Interesting, major drops in the market never go below previous major drops in the market. So we know when this drop has reached a certain level, it's never going to go below this drop. This drop didn't go below this drop. This drop didn't go below this drop. And guess what? This one didn't go below this one. So the market knows when it's hit the bottom or when it's about to return. Bottom isn't here. That's the fear. Oh, it'll all go to custard and we'll all lose all our money. But the truth is, eventually it gets to be cheap. And when things get to be cheap, what do people start to do? They start to buy. The housing market hits a previous low. Guess what? It stops, sits on the bottom, and then people start to buy. So when do we expect this to bounce? Well, it's already bounced because it's back up to there already. Does that make sense? There's a very fast drop and a very fast bounce. Does that make sense? Again, I said I wouldn't spend too much time on this. Lots of charts that show you what's happened. There's the bounce already. Like we're back up to where we were based on COVID plus vaccine. Lots of charts you can go and look at. This one's fascinating. It shows the volatility since about 1930. But if you look at this here, that little blip there in the context of the whole journey. But again, all I wanted you to do was see that in context. So that crash there was actually not as big as this crash here. That's the W, big W for 2005, 2008. And it was actually bigger than this one. It dropped slightly more, it lasted slightly longer, and it bounced about as much. Again, these are just ideas. What you should see, if you are younger than me, and most of you are younger than me, if you're in your 30s, 40s, maybe 50s, then generally the market is up. It's up. Can everybody see that? I usually ask that as a question, and most people say, yeah, it's up. It's up. Yes or no?
Yep.
Again, I'm going to try and just expand my screen because it's not taking into account everything. Is that better? So it's up.
Yep.
So what you should see though is this. Now this has been going. I sat down with Darren one day and he pulled out all the charts, and because he's a chartist, and he said, right, let's go back 300 years. We presented this at Google, and basically for 300 years it's been doing 18 years up, 14 years flat, 18 years up, 14 years flat. In the last 3 flats, there's been a W recession. Is anybody starting to see a pattern? Why is there a pattern? People keep doing the same thing, but they keep doing it bigger and bigger and bigger because there's getting to be more and more and more of us. So if it follows a pattern, then what's the chance that it's going to continue to follow that pattern? And is COVID in the long term actually going to make any real difference in the big picture space? Sure, it's going to make difference to the guy whose pub went bust and the ladies who run and gentlemen who run hospitals and people that died. I get that. I'm not trying to belittle it. But in the overall world global economy, which is where we all run our businesses, is actually going to make that much difference. So all sorts of types of recessions been talked about. Here's the 4 typical descriptions. Basically, if anybody's telling you, I thought this one was going to be a U recession, and the truth is, COVID's created a unprecedented shift in the world business, which means we actually don't know what's going to happen next. But do I believe that growth is coming? Absolutely. Based on those charts, do I believe this is a short period of confusion and uncertainty that will create massive change. It will shift the world the way that the 70s, the 74 recession did. Out of that came a whole bunch of new technologies and new industries. So it's a complete shift. So which one of these will it be? Well, it feels like it's been a bit of all of them, but let's see what happens next. So what I would love you to do is Google, those of you that haven't, if you haven't got one of these on the wall, is Google economic clock. Go and find one by a company called Count. It's an accounting firm, so really original, C-O-U-N-T, Count. And they produce this economic clock. Some of you have seen this. For some reason, I'm not quite getting the same. Can I move this down a bit? No, I can't. I'm sorry, the slides are not quite as tidy as I would like them to be. COVID hit, we were just crossing this line between hesitant, uneven recovery and general recovery. What tends to happen is if you've got 14 years of flat and 18 years of up, the 18 years of up starts here. You get 5 years of recovery beginning, which is turmoil, hesitant, uneven, not quite sure what's happening. Either side of 9 o'clock, or 99 o'clock, you're holding this, either side of 9 o'clock, you get a lot of turmoil, 3 years of quite serious turmoil, where as the market starts to expand, corporations that aren't well funded start to go bust. The big corporations that have run out of cash go bust. You see the big retail industries going bust on quarters, January, March, June, and September, because that's when the rentals come in. So they tend to have to find rent for 200 stores across the country, can't make their rental payments. And that general recovery sorts out the men from the boys or the girls from the ladies, whichever analogy you want to use. And what's left is then, yeehaw, here we go. And that then becomes 10 years of fast growth. In other words, in this space, that last, you get 5 years of hesitant, uneven recovery, some turmoil. There's a market reset in there called the 87 crash. There's your market reset as the market overheats. There's your market reset as the market overheats. And then off we go. Oh God, sorry, I keep grabbing the charts. Stop doing that. And then the last 10 years is fast growth. So that's what we're expecting. That's why our belief is now's the right time to grow your business. What are people saying? Typically 60, 70, 60% of leaders are focused on going forwards. What you're talking about today is going forwards, planning new improvements. All the clients I'm talking to right now are talking about opening new projects, opening new products, opening new markets. Most of the clients I'm working with at the moment are looking to recruit. So we are all focused on growth. We were focused on growth before COVID hit. We're focused on growth now. So here's the little monster that causes all the problems. Some of you know what this is. It's the solo swan curve or the S curve. And basically what this says in any economic cycle, in any product cycle, in any project cycle, in a business cycle, is you start something off, there's a bit of turmoil while you work out what to do. You eventually work out what to do and it feels like you stood still. You feel like you went backwards and then you got forwards. Things start to work really, really well. The economy, the world, the product, your marketing campaign starts to work. Eventually it hits peak performance and then it starts to drop off. Now, at that point, what do we need to do? And again, if we were live in a room full of people, you'd be shouting out the answers now. I know it's real difficult with Zoom. At this point, you start a new project. And what you do is then paste and copy this curve onto the bottom of this one. And what happens? Down goes the energy again. It gets down to about here and you think, oh my God, we're worse off than we were before. But the energy goes down, you pick the energy up, and off you go to the next session and you draw the next curve, and then that is ineffectual, and then the next curve. And that's how businesses build. And interestingly enough, first slide from the EY world, there's their version of the swan curve over the last 50 to 70 years. So they're talking about post-Second World War, what happened to globalization, global industrialization, the technology boom, and then a pandemic has caused us to reset. In other words, something shot the market into a new world. Again, if you want this report, I'll send it to you. It's fascinating. And they're hopefully looking for a better world S-curve. I love that. The first time I saw it, I thought, the better world S-curve. I just love that. So pandemic will talk us to migrate to a new what? And there's a whole bunch of stuff in the report, some of which I'm going to share with you, is what are we going to migrate to? What is going to be the big winners? What's the technological advances that are likely to come in to help us over the next 10, 15, 20 years, depending on your age and your focus. I am definitely focused on the next 10 years. Some of you will be focused on the next 20 to 30. Haven't seen any 19-year-olds on the call today, but you never know. You might even have one as a son or a daughter. So how does that play out in the individual business world? Because markets are driven by individual businesses. Individual businesses go through exactly the same issues as the market and the world. So here's how the S-curve looks in a business. So this is how do small businesses grow. Now, if you're smart, you overlap the S-curve like this, which is you start pre-planning. Any of you that have done our capability analysis know we put a high level of importance on pre-planning. And if you know this is going to happen, then you start pre-planning. This is quite an advanced business that says, oh, it's just not working, boys, we better start the next one. Now, the really smart ones, of course, would have started this next one about here. So as they knew this was going to drop off, the next one's dropping off to pick this one up here, and off we go again. Can you all see my cursor on the screen? I want to make sure I'm not. Yep, perfect. Okay. And then this one you'd have started here. So as that one hits peak, the next one hits bottom. Now, how many businesses think that far ahead in their world? Very few. What most people do is they wait until they're busy before they think about employing the next person. In other words, they wait until here to start doing that. And this therefore joins on here. And that's when we're worse off than we were before. That's when I go into businesses and I hear them say, oh, we were doing really well at 4, but we're struggling at 7. So we're going to go back to 4. Does that make sense? And then at the end of each one of these, you have this black hole. This is the transition point. This is an area where businesses get sucked in because they don't know how to fix the issues that sit in here. There are 4 specific issues that sit on here, and there are different issues that sit in these black holes. So those are typically the 4 things that we find businesses focusing on when we come in and see them. They hit certain transition points. Normally I can say, what are you focused on? And they'll tell me, it's all right, Guy, I'll send you the chart. Normally they'll tell me, oh, I'm focused on sales. I go, turning over about 1.5 million. They go, oh, how did you know? Or they'll say, I'm turning over 1.5 million. I go, I bet you're focused on sales. And they're blown away that we know what they are, because over and over again, over 7,000 businesses we've worked with over the last 20 years. I do about 200 projects. I've done about 250 projects, and I've just seen this repeat over and over and over and over again. So what we're looking for is a solution. Let me give you some of the examples. I'm going to get you to go and do a bit of work in a minute, because you've had enough of me talking. Here's a typical run of what happens in the business and what revenues they start to reach before they change focus. So there is a black hole at 80,000. Pre that black hole is what we call the hobbyist business. That is, I make tea cozies for my local tea shop, but I have a full-time job as well. And eventually I get to about 80,000. I go, oh, I'm in a business. I'm doing okay. 80,000 is pretty good. If your average wage in the UK is 24,000, 80,000 is pretty good. But I'm stuck. I don't know what to do. I can't move forward. Why am I stuck? If I get unstuck, I generally tend to go through to 120,000. Now I better start selling some stuff. I've got to focus on sales now. Before, people bought my maid and that was fine. Now I've got to focus on sales. If I get really good at that, I'll go, where else can I sell it? I'm selling in my local tea shop. Let's go and talk to all the tea shops. I'm selling online. Let's start a shop. I've got a shop. Let's go online. Seeing a lot of people doing that at the moment. A lot of channel shift in businesses today, moving from physical to online, etc. Once I've got my channels working, what else can I sell them? So I've got 3 tea shops now. Now I'm going to sell them chocolate and biscuits and takeaway sandwiches. And then finally, oh, this is now a really serious business. I better work out, is my brand okay? I'm going to sign right in the van. And then I get to about 750,000, I get stuck again. So I'm going to throw you into chat rooms in a minute. I'm going to stop sharing. The exercise is, why am I stuck at 80,000? I'm only going to give you 3 minutes because there's enough people on this that do know the answer, because some of my guys on that. Why do I get stuck at 80,000? And why do I get stuck at 750? All I want you to do is work out, what's the structure? What does the business look like? Why do you think it's stuck? What's going on? Quick discussion about those 2 business models. Somebody hand up and tell me, what's the 80,000 black hole? What's the problem there?
Lack of resource.
One person.
Yeah, it's a 1-person business. That's a 1-man band, doing pretty good at 80K. That's not bad. It's not the best corporate CEO pay I've ever seen. But if you're a self-employed person booking 80 grand, you're probably doing half decent. What's the problem?
It's only you.
It's only you, but what's the problem?
You're doing everything.
Yep, but what's the problem?
It's the
If you
capacity
recruit one
planning.
more person, it'll be a loss or a.
Yeah, so as soon as I add another person, I've got to go home and explain to the wife or husband why we're giving away 25 to 30,000 pounds of our 80,000 to pay somebody else to do something we were already doing. And so they get stuck. About 4.1 million people stuck in that. Most people tell me it's the VAT threshold. It's not, it's just that they put the VAT threshold there because one-man band businesses generally tend to get to about that level. So we had an accountant show up at one of our sessions who said he had over 450 one-man band sole trader clients. For me, sole trader is SOUL trader, by the way. You're trading your life for money. But he said average income 79,000, which means he had them up to 120 and down to 60. It wasn't the VAT threshold. It's that I just physically can't do anymore. So the guys that sell really top end expensive products get up to 120, 150. I found one-man bands doing 500,000 a year, but that's the average. Absolutely. What's the 750 black hole all about? It's a fundamental one, this. 96% or more of businesses in the Western world do not work out how to get through this black hole, never break $1 million revenue, and never get past 10 staff. 96%. A lot of you are already past it, but you're in a small percentage. So it's a major, it's a doozy. What's the problem?
I think for some companies, Nick, there's a span of control thing that one man, one woman has got a limit to how many people they can successfully manage. And you're probably there or thereabouts on that number. And it's you've got to put in another layer. That could be a part of it. Is
the correct answer. And basically what the management training world says is people can manage, this is good ones, by the way, people can manage 5 people plus or minus 2. So if you've got 7 plus you is 8 and your average turnover is between 80 and 100,000 turnover and there's 8 of you, there's your 750 to 800,000. The moment I get to 9, 10, 11, 12 staff, I start to struggle. Christoph understands that. He's just reached the 12 staff number and he's starting to go, oh, I need to get this going. I can't see where he is. Gives away, Christoph. Can't see you on the screen at the moment. There he is, yeah. So Christoph's just hit 12 staff and he's looking to accelerate through that number quickly, and he will. He's already got to the other side of it structurally. Now we just need the revenue to follow and he'll be a happy bunny. So that's the issue. It repeats over and over and over and over again. Once you know it's a mathematical formula, and all you need to do is apply a different thinking to that mathematical formula to break that 750 black hole, then you've got a solution. Now, please say there's plenty of businesses I find that have got through, but they didn't solve the issues. So all of the issues that sit back there are still hanging on to them and holding them back. It's still giving them a problem. So what we want to do is look at how we fix it. This is quite interesting. Only 4% of business owners reach the million. 4%. That's crazy. Only 10% of that 4%, so 0.4% of businesses ever hit the 10 million mark. That's pretty crazy. So if we have a formula, which is what I love when I first met Darren as my partner, and he said, look, we worked it out what happens at 700 million, because if we work out why businesses get stuck at 700 million, when we notice they are fixing it, we can invest because we know they will grow super fast. If they hit 650 million, we know to get out because we know they'll get stuck at 700 million for about 5 years. And he showed me stat after stat after stat after stat of business that grew really fast, 350 to 650, got stuck at 650, took 5 years to get through to 700,000, and then suddenly jumped to 1.2, 1.3 billion. Now he said, if you're a fund manager and you're investing, they're easy to spot because there's not that many of them about. It's really easy to see them doing that. And he made a fortune back then investing in those businesses that were about to go from 750 to 1.2 billion. Now, take that back into the small business world. And if we can go and help and post-COVID, helping small businesses grow and develop is going to be one of the most important things we can do in the UK. If I can go and help businesses that are 750, 800, 900,000, a million, flip through and jump onto that next growth curve, we'll be adding some value to the UK market. That's our belief. Helpful, interesting, different, not seen these stats before? Yeah, cool. So there's the next run. This is the run that most of you are on, or at least wanting to get on. This is where the businesses get stuck in the middle here. Each of these is an investment opportunity, which creates the next channel. This is you'll notice this is the S curve joined up. This is why it does that. And as we grow from 750 to 17 million is the next black hole, which as Rich will point out, I'm not going to do this one as an exercise. That's the next layer of management. I want you to get your head around this. When you learn to do what you do today, if you're an accountant, an architect, a lawyer, a tech specialist, etc., and you went to university, the chances are you learned how to do tech, lawyer, accounting, building houses, designing cars, etc. Fair? What you probably didn't have was 3 months, 3 years, 2 years, or even in some cases, half a day on how to build a practice. Is that fair?
Mm-hmm.
Like if it's half a day, I talked to an architect master planner recently who's been 15 years, one of the top master planners in the world. And I said, how much time did they spend at architecture school teaching you how to build a practice? Half a day. So suddenly I'm running 60 guys in 7 offices around the world. What's the chance I've got any skills on how to do that? Slim to none. And it's the same in law firms, it's the same in accounting firms. I see lots of this super brilliant product skill set. None of them trained how to run a business. And the 2 big things they need to go through this one and to get through this one are infrastructure business management skills, not product skills. But product skills will get you up to about 3 to 4 to 5 to 6 because product skills will drag you up here. I find businesses that have brilliant brand and marketing skills drag their business up to 12 million. People are good at building relationships, drag their business up to 3 million. So really good sales and channel people get up to 3 to 4.5 million and get stuck. Really good brand and product people, if they've got no skills here, never get through this bit and get really frustrated. But what we need to do is build a strategy that builds a 12 million pound sales structure, a 12 million pound channel, a 12 million pound product, and a 12 million pound brand business. And if we just do that, we get stuck at 17 million. So as we start to get to here, we are pre-planning the next strategy. Just to give you a look at what the whole thing looks like, that's the top-down, bottom-up strategy. Those are typically, not exclusively, but those are typically the things that need fixing the most. Now, please hear, if I go to sales, there's a whole bunch of things that need fixing at sales. This is the list of the things that we see missed the most. So I go in and see big sales strategies, retraining the sales teams, building new sales skills. We've got them on training. And what they do is they train them on the wrong thing. They do product and thinking selling processes. They don't do solution selling. But the top 3 things they don't do or we find missing in this process is on this chart. And the way people build is they fix this, it gets them here. When they get here, it's like building a house. I put my foundations in, I put my first 2 stories up. I go to look at the building specs and I want to put 3 more stories up and I go, the foundations aren't good enough. So I need to go back into the foundations and rebuild it to cope with this. Then I build this to get to here. And when I get here, I go, oh, this doesn't work anymore. My sales project won't run a 6 million turnover business. I need a new sales structure. I need new sales teams. I need new collateral. So I have to redesign it all again. And then when I get up here, I go back down here and go, this will never work at 12 million. We need a new CRM system. We need a new IT package. And that channels that we're working with at the moment, they're nowhere near big enough for us. We're working with a local accounting firm. I really need to talk to Trevor at EY and talk to one of the big 4. And that product, it's really not enough product to go to 12 million. And we keep seeing people go back into the basement to rebuild the foundations to go to the next level, which takes forever. So as part of the process of working with businesses, we go beyond the 17 million black hole and design the 24 or 48 million pound business, which scares the 1.5 million turnover business owner to death, by the way. So sometimes I disguise it. I don't tell them it's 24 million, Christoph. We just build it. When I work with Rob Gardner, and there's a number of videos of Rob saying hi on our website. He was turning up 5.6 million. He said, I want to get to 10 million in 5 years. You know why people pick 10 million in 5 years? Anybody? This is 60 quant mathematicians in his business, and the best he could come up with was 10 million in 5 years. He does laugh when I do this presentation. We had him 18 months later at 12 million. And why? Because I designed a 48 million pound structure for him and it dragged the business through. He's now 28 million on his way to 48. When he got to 12, I showed him the 48 million pound and he went, yeah, okay, I could believe that now. If he'd showed me that day one, I wouldn't have believed you. So this big vision, building top down, really, really important on how to build businesses and how to get them to work. Interesting so far? sharing some stuff. I know some of you have seen some of this stuff. There's the big picture. There's our old make a load of money as a fund manager, 700 million black hole. We love that one. Well, Darren loved it because I wasn't working with him as a fund manager then. But I've worked with 2 business owners that have gone through that. I have a CEO, I thought he might be here today, Javier Bardem, that some of you may have met him. He's a very good friend of mine from Spain. He jumped into a business that was 700 million just at the time to take it to 1.2 billion as the COO and got a massive tick and a big pat on the back and a huge bonus. So he was very happy. The way the businesses are described as in our world, startup doing businesses. This is where everybody is doing something in the business. We're in the in process. As we start to get past one person, all of this is doing. So I can manage 3, 4, 5, or 6 of us. We're all in the same office. We all know what everybody's doing. As I get past 8, 9, and 10, I now need processes to kick in to tell the people that I can't tell every day what to do. Make sense? How good at process are ing people? It's a technical term. It's called crap. They are useless at it. They hate process and system. These are entrepreneurs that will jump off a cliff and build an airplane on the way down. So building processes and systems is hard for them. And here's the other issue. The processes and systems for a business that's just got through is different for the processes and systems for a business that's halfway up this run, is different again when you hit 70, 80, 90, 100 staff, and the complexities keep getting more complex. Nobody builds a process at 1.5 million for a 12 million pound business. Everybody, when I come in and start building functional structures that will go to 12 million, says, but we don't need all that, Nick. It's all too big for us. So you have to build a framework that you can expand and build up to. So you build the model for that business today, you build the framework for it today, and then you build it. So start with the design and then build up. So we literally talk to business owners about this, 24 million and 48 million models when they're down in this run. And it frightens them sometimes. They go, oh, it's all too big, we can't get that big, etc. But you've got to think big to know what investment you should be making, if that makes sense. But there's the whole run. Come talk to me if you want to get up here. I'd love to be part of that journey. That's always good fun. Right, any quick questions? I'm going to stop sharing for a minute and say, is there anything come up from there that you kind of think, oh, just tell me what you mean by that, or what is that? What's the answer to that? So is there anything, Julian, there's a question, something come in on the chat.
There's a question on the chat from John in relation to why you're using revenues rather than profits. Very different scenarios in the size of a person's profits in a business.
Sure. Look, revenue is the easiest thing for us to measure when we're looking at turnover on businesses. Not everybody publishes their profit. What we find is different industries create different profits. So there's different cost sectors to a business turning over 250,000 or 6 million. So we tend to look at revenue. What we do look at, if I go back to those jump numbers, at the top of the peak, we're normally service industry seeing anywhere up to 20% to 30% profits. Bottom of the peak, we start to see 10 to 12% in the service industry. So at the bottom of the peak, the service industry doesn't really panic. The legal industry doesn't panic when it's in the bottom of that peak. It just looks at itself and says, oh, we're not making quite as much money. In the manufacturing, however, what you tend to see is bottom of the peak, they lose money, top of the peak, they make money, and their average is 7 to 10% EBIT. So they don't make as much EBIT because the cost structure that runs through there changes slightly. So I start with revenue and then work on utilization of their resource. And I'll go through the resource allocation later, but revenue was easier to get hold of.
Okay, thanks for clarifying.
Yeah, and look, most of the stats that you look from the government websites, those stats just there, all talk about revenue and turnover, etc., because it's the most published and easy to access documentation. But that's why. Any other quick questions? I haven't done this one for a while, so I thought this might be quite amusing. We tend to do 3 things. We get involved with businesses on growth, and we're working with a number of businesses on growth at the moment. We don't tend to get involved as much on the funding, preparation for funding, but we're not a fund. We've got people ready for funding. I've introduced them to funding. I have raised money for 1 or 2 businesses, and I've invested in some myself, so we do invest. But the 2 things we tend to find we do the most, and certainly a lot more post the W recession, is exit strategies. And I really wanted to talk to businesses. The model that we use to create growth, Joe's been through this, so she'll recognize this. Sorry if this is going to be boring, Joe. The thing that we use to kind of measure both the profit, the growth, and the possible exit strategy is a valuation framework. Now, I'm not going to go through this in massive depth, but if you imagine there is a standard benchmark multiple for a business to sell at, then typically when you are talking to your accountant and you say, can you tell me what my business is worth? I'm going to apologize to Trevor in advance here, but this is what your accountant will say. He will give you this, or she will give you this formula. So does anybody know what that formula stands for? If you're one of our guys, you do, so don't tell them the answer. But does anybody who's not seen this before know what that might stand for? Josh. So this is what it stands for. Valuation equals profit, or a proxy for profit, which could be membership or could be turnover or could be something else. So valuation equals profit times depends. You go to your account and say, what's my business worth? And he or she will say, well, it depends. Now, if you talk to a fund manager about it, they'll go, no, it doesn't. It's a formula. Valuation equals profit times a multiple. But if you ask a CFO how to calculate the M, they don't really know. They'll go look at data online, but they don't know. So if you do a master's in business finance, that's 2 years study on how to calculate a share price, which is some weird mathematics that fries my brain, to be honest with you, but there's a multiple. But the simple observation is, and if Nic Rixon was on the call, Nic tried to get on earlier, Nic would tell you that he's connected with IMAP globally around the world, and I suspect Trevor could tell you the same data here, is when you look at a business sale, you'll find some sell for above benchmark and some sell for below. Now, if you ask why they sell for below, I can show you why they get discounted and how they get discounted, but not enough people know why they sell above. So as a fund manager, when you're given an end of year report with a plan, if you buy into that plan, what you need to know is the management's capability to deliver that plan. And that doesn't show up on the P&L and it doesn't show up on the balance sheet. Every single company in their published annual report tells you why their staff are the best, but they don't actually explain the matrix or the mathematics behind that or the KPIs behind that. They just say, our staff are the best. They come from the best university, but everybody says that. So the fund managers ignore it and they don't give anybody the tick. So how do you calculate a multiple? And the key here is this is building assets off balance sheet mostly in your business such that you can leverage them to create profit. Income follows asset. So even if a business owner says to me, I don't want to sell my business, Nic, I go, but we still need to build a valuation framework that adds assets to your war chest or to your business or cupboard so that you can leverage that to spin off more profit. The most valuable block of flats creates the most highest rental. Yes or no? Everybody okay with that so far? So what we're looking for is a formula. So what we're looking for is what are the factors that sit above this line. Now, this was stuff that Darren's quant team identified. They went finding businesses that definitely had sold for above benchmark. They looked at the reports where they could get access to the data. We go look at the data. Nic Rixon's team does this for me when I'm looking for what do I need to build above line to get a better exit. Whether we're selling or not is irrelevant. Do we want to build these above line valuation assets or not? So 6 things sit above the line. And what I want to do is I want to quickly draw this out for you. Actually, do you know what? I'm not going to do that because we're going to run out of time. Jules and I plan to jump on a whiteboard at this stage, but I'm not going to do that. It's going to take too long. So all I want to do is share with you, and I'll run through them very quickly, the assets that sit above the line, if that's okay. So again, we'll send this out. You don't need to worry about copying these down. Some of you have got them. So those are what we call the asset base that sits above benchmark, which you have to have in place at a level that I can measure. You can't just tell me we've got the best talent. I want a KPI. You can't just tell me you've got capability. I want to see it. I want to know. This is when management teams bring in a new senior CEO to a business and the share price goes up, because what's just happened is the market sees the capability of that business has just improved. And culture, now we're starting to see all of the stats around culture. Everybody that knows anything about business, and it's even more so today, really great culture doing good in the world. And the investment world is starting to see a 25% increased return on businesses that are doing that. So the Teslas, I want to measurably change the use of power, clean power in the world, and his share price is through the roof. And for a long time, the market analysts couldn't work out why his business was worth so much money. My very good friend, Rob Gardner, is now creating funds for SJP, which are forcing the businesses that they invest in to create proper sustainability products in the world. So he's using their trillions of pounds invested to start to force companies. Now, first of all, you go invest in the ones that are already doing that, but hey, let's create some change. Let's actually use our money to force Shell and BP to start to become greener and start to start planting trees. So that whole culture, talent, capability, you need to build in layer one. Now, this is an average. We've done stats that have shown lots of different versions, but an average increase, if I can demonstrate that, and everything below the line is okay, I can get a 1.2 times uplift on my benchmark multiple. So a 20% uplift in my multiple. Now, if you then apply that back to the fact that your profit goes up as well, look at what value profit culture brings, what capability brings you in profit. So not only does the multiple go up, but so does the profit. Is this making sense? If I get systems, product, and innovation, so that's when I start to demonstrate a systemized business. So I fix my 750 black hole. I've got a system that fixes my 17 million black hole, and I've got systems and processes behind each one of those jumps. I'll get another 20%, 1.4 times benchmark multiple for systems and product innovation. If I can extend my product, demonstrate we've moved it into different markets and different processes, we've taken one product and we've created 10 from it, which means I can do 11, 12, 13, and 14, then I'll get another 20%, 1.6. If I'm into different channels, when Apple announced it was going into China, share price jumped. When Elon Musk recently got 6 of his cars approved by the Chinese government for subsidies, share price shot up again. So channel extension, especially if it's documented and signed and agreed with contracts wrapped around it. We've got the contract to ship our product into the States for the next 5 years. Boom, the share price goes up again, 1.8 times benchmark multiple. Brand, position, architecture, being well known. As long as remember, somebody's got to see this as an asset. You can't just say, oh, I've got some brand architecture. It must demonstrate value in the marketplace. There must be a KPI wrapped around it. There's got to be some example of how you're getting more revenue because of it. If you can do that, 2 times your benchmark. And if you can demonstrate your business is scalable, 4 times your benchmark. And there's plenty of examples out there where you can go and find scalable businesses. Tech sector at the time Facebook sold was quoting benchmark 25 times, which was pretty astronomical anyway. Facebook IPO'd at 100 times, which in fact was just 4 times benchmark. Make sense? So we have taken businesses that have come to us and said, we've just been offered 6 times. We've taken 18 to 24 months to build all of this with them above the line, and we've got them away, one of them at 23.9, call it 24 times sold. So there are examples where this actually works right on those numbers. I've also seen Nick come back with data that says, oh, we're only getting 1.3 times benchmark here for this industry in this product. So it's not fixed, that's not guaranteed every time. We need to do the research into the market to find out what are the top businesses that can demonstrate all of that above the line actually selling for. Interesting? Certainly this wasn't something I got taught when I looked at building a business. I'd get somebody who was a brand specialist come in and say, oh, Nick, you need to do this, but nobody could tell me why, nobody could put metrics around it for me. The problem with this is an and model. I need to do this, and I need to do this, and I need to do this, and I need to do this to get this. You can't just jump straight to that. Because if I come to you and say, my business is scalable, but you look at my talent, capability, and culture and go, yeah, but you're never going to do it, then you're not going to give me the upside. I might want your business because I've got all of this, and you've got all of this rather, but I've got this. So this is when I take my television manufacturing business and I just give it to Sony and say, look, you've got the brand and the distribution channel. You'll make my business worth 10 times what it's worth for me. Buell took their motorcycles to Harley and gave it to Harley. I know a little bit about motorcycles. The Softail swinging arm manufacturer was never going to sell enough on their own, so they sold it to Harley, who had that scalability and distribution. So there's lots of examples in the world where the right JV, somebody who's got this and this, goes and buys somebody who's got those 5. Make sense? So I use this for joint venture merger acquisition strategies. We use it for exit strategies. We use it for profit built strategies. We use it for growth strategies. And we can do a capability on each one of those, do an analysis and design a project plan that helps build this in your business. That's the above and below. So this is when somebody comes to buy your business, they'll put a forensic accountant in and they will go look at all of these. Their typical, Trevor will probably pull me to one side and go, oh, you're slightly out on the numbers on this, but the typical discount is if you haven't managed costs, it's a discount of 10%. If your revenue's not really where it should be, then it'll be a 20% discount. If your assets are all old, your hotels all need updating, your software is 25 years old, your ships have all got holes in, then there will be a 30% discount. Any liability, 40% discount. BP popped to cap in the Gulf, massive liability, their share price dropped 39%. Quality management team, if I don't believe your management team can deliver what you're selling me, then this is where you get half the money up front and a 2-year earnout. And that's called a 50% discount, because you never get your 2-year earnout. You'll slog off, they'll exhaust you and you'll be gone after 3 months. Trevor's nodding his head up and down because he's seen hundreds of these. So, and the last one is economic crash, anything between a 60 and 95% discount. Yellow Pages went from £6.40 a share to 5 pence a share because the paradigm shift in the industry said, we don't want big yellow books on our desks anymore. Online killed them dead. They took too long to jump the S-curve to the new S-curve and go online, never made it. Make sense? Now, the problem with this model is this is any of these happen and the discount drops straight to that. You can have great cost management, good revenue, good assets and have a liability, 40% discount. Not prepared to take the risk. In fact, most small transactions just don't take place if there is a liability in there anywhere. They don't like dodgy shareholders that can't be got hold of. They don't like buildings that have got delapse. They just don't like any liability. So the big, in the small business world, they just go, not worth it, want it perfect. Quality management team, this is your standard earnout. You've got to stay around to, and if there's a massive risk here, they don't touch you. So any of these happen and you, so Kylie's just, somebody's just going to come and join us. Any of these happen and you drop straight to that discount. Here's the bad news. You have to get all of this perfect just to get to benchmark. Which is why when you ask your accountant, what's my business worth? They'll go, depends. Depends how much of the below the line stuff needs fixing. So we come in and rag list the below the line. We hand you back to somebody like Trevor if your cost management and your revenue management's not right. We talk to your whole business about asset management and liability management. Make sure you got a good lawyer or a good fixer. Like we spend quite a lot of time below the line, rag listing it, what needs building and fixing to get you to benchmark. And then how do we get you above benchmark? Now, the simple, fast fix for us in a lot of businesses, we build V+2, talent, capability, and culture, and and V3, sorry, systems and product innovation. We build V2 and V3, and it fixes minus V6. So I can virtually double to treble the value of your business at exit by just building V2 and V3. Now, if you already have V4, V5, and V6, then we fix the joined up process between there. And that's how we start taking businesses from 6 times at benchmark to 24 times. Now, I didn't get taught any of this. When I first met Darren, I went, why aren't they teaching this stuff at business school? He said, you should have gone to funds management school, mate. It's a different process. In business, everybody is focused on the P, which is this, revenue over cost. Everybody's focused on the P. I spoke to Telefonica, 275,000 staff, and asked Elietta, who was the CEO at the time, how many of your people focused on the P and how many on the M? He said, we're all focused on the P. I said, but don't you get paid based on share price? And he went, yeah. And then he went outside for a cigarette because he didn't know how to fix that. But let's have a look at some mega trends. I'm going to do this quite quickly because I will send you the document out on this for you to read at your leisure if you ask for it. This is what's driving. This is off of the EY document, which I will say again, I thought was absolutely brilliant. This is what's kind of root causes. This is what's causing our challenges. And we've got ups and downs on both. So there's good things about technology and there's bad things about technology. There's good things about globalization. There's challenges. So there are drivers in all of this. This is my world because I'm 3 to 10 years. I'm absolutely massively focused on, can I create a new world for my grandson who is currently 1 year old. There he is. He is absolutely gorgeous. Is the world going to be okay for him? So decarbonisation is a big thing for me. How do we put this bloody carbon back in the soil or back in the trees or back somewhere? The techno-economic and technological Cold War, we're starting to see that with 5G and who's allowed to roll out and who's not. Certain people, behavioral, synthetic media is a nice way of calling fake news. Donald Trump's brought that to the highlight, etc. So there's a whole bunch of short-term and then some real big long-term ones. And there's headings in their document that covers all of this. It's real in-depth, but these are the kind of things that are going on. You know, societies and economies. Are we really going to carry on allowing 1.3 billion people to go hungry? Are we going to put up with the fact that 250 million people currently live in a floodplain? And if we don't get the decarbonisation right, we're going to have nearly 1 billion people homeless by the year 2050. Like, these are serious issues for some of the younger ones amongst you. Certainly for my children and my grandchildren, their issues. So there's a lot of stuff that we could be doing. Here's some of what's driving it. I found this fascinating. I grew up with the Harry Dent forecasting of economies, talking about the baby boom bubble, and those two economies, which was the baby boomers, of which we had 1.2 billion, and the X-Gen. If you go back 15 years, what was happening is the X-Gen were just coming into their first family, buying their first house, etc. And the boomers were just moving up to their big 5-bedroom house in the suburbs. So we were reaching our maximum earnings, maximum spend period, and they were reaching their first spend. And that's what drove that massive economic boom. The first big wave that you see in that 100-year stock market. So what's happening to that? Dent predicted 2012 that the market would crash massively as boomers moved into that 55 to 75 year start saving gap. Throw COVID in on top of that and it changes things quite dramatically. So what we've got to look at now is what's coming through. What's going to drive the next wave? What do I think is going to take that 10-year fast growth cycle from 2021 to 2031, which is the finish of the 18-year growth, and smash it out the park? Well, if you add up those two, what we got is 2.6 billion people, few of these in there as well, call it 3 billion people driving the economy, spending, and back when we had the boom. What we've got coming through is 1.7 billion millennials about to go into their first spend, buy their first house. And I'm talking to them at the moment because they're my mates' kids, etc. I'm seeing them buying their first house and having their first kids, etc. 1.8 billion Gen Z about to enter the market. 1.4 billion X-Gen moving into their highest level spend, which is about 5 billion people are going to start driving a market that is going to make the one we built look tiny. It's going to be enormous. There's nothing going to stop this. There's 5 billion people. Now, where it's going to happen, this is the scary thing. You want to look at the difference between ages. It's not going to happen in Japan, people, just to let you know. Because the Japanese older generation is going to 62% and their new generation is down to 8%. It's going to happen in Africa. It's going to happen in Pakistan and India and Indonesia. These are the markets that are coming and they are going to be enormous. In this document, it's not here, but if you grab it off us and read it, there's a fantastic section on why the final, at last, Africa is going to suddenly switch on and become one of the powerhouse economies of the globe. We've all stayed away from it over the years because it's all too dangerous and the political problems down there. It's about to change hugely, according to EY, and everything else they've said in here, I think absolutely rings a bell. So there is a massive generation. So are you looking at charts like this? If you're a 25 to 35-year-old today, 45 to 50-year-old, are you looking at the next 20 years of business and going, what's coming next? Because it's huge. My favorite subject, decarbonisation. There's a fantastic film, if you want to watch it, Kiss the Ground. It's narrated by Woody Harrelson, and it's basically a fantastic American, it's almost an oxymoron, that, isn't it? Fantastic American guy who's walking around trying to teach farmers why the way we farm today is creating more problems with carbonizing the world than anything else. And that if we reversed how we farm, we could put most, if not all, of the carbon since industrialization started back in the ground. This one talks, natural resources, talks about being able to do that, planting trees. Chinese have been planting trees since 1977. They've reclaimed millions of square miles of desertified land by planting trees. They've been doing it since 1977. That's how far ahead they were thinking back then. They have the single highest use of electric vehicles. Like, we've really got to work out if in the Western world, if we're going to catch up with some of these economies, we need to get our act together. So worth watching Kiss the Ground. It's quite fascinating. Woody's always interesting. But again, lots of information in this. This is the thing that scares me slightly. Here's one of the problems we've got to solve. Synthetic media. This bit here, this red bit here, absolutely terrifies me, with a young grandson and a a wife who's a type 1 diabetic, so COVID massively likely to impact her. 212 anti-vaccination false articles online in 2019, before we even hit the pandemic. 276% jump between 7 and 17 in false news. So Trump's right. And it's such fantastic quality today that there are massive examples, big frauds, where video-based CEOs have got online to CFOs and said, it's emergency, you need to transfer, 100 million to this fund today, we're under attack. And they were so believable, the CFO's done it. Video-based. Like, I'm looking at the person I know on the screen talking to me as if they were a real person. It's got insane. So authentication patent type issues are going to be number one. I have a great friend of mine who's not on today who came up with a security app about 5 years ago, and he was just 5 years ahead of his time. If he could bring that out now, he would absolutely smash it. So again, fascinating. If you're interested in this document, I'll send it through. So here's what I want to do quickly. So how are we doing for time? We're going to go fairly quickly. Just double check this is get built. I'm going to do this quite quickly because a number of you have seen this before, but it doesn't hurt to be reminded. We've got 1 or 2 new people on who haven't seen it, so I will go through it in detail. But let me just walk you through why, 2 reasons, why we get stuck, why we create models that get stuck, and how you can unstick it. And this is a tool you can go and apply to your business today. I've just had a new client that's been on about 2 months, has just used this model to come back to us and say, oh my goodness me, there is no possible way we've got our percentage mix right. We can see what we need to do to fix it. And it literally took 1 month of data analysis inside their business, which was pretty easy to do. So let me just take you back to the screen, jump you around. So again, we use a real simple model. Some of you have heard me use it. It's called Red, Blue, Black. It's a Sherlock's framework. I've been using it with the Sherlock's team for 17 years. I'm glad we still have it. Apparently Darren was offered 10 million for Red, Blue, Black by an accounting firm in Australia, 12 months after he launched the business in Australia. That's how valuable they thought it was. This has been singly responsible, this framework, for increased productivity in revenue production inside businesses between 5 and 30%. I applied this across a European-wide business, Sony Pictures and Home Entertainment. Their report back to us was that by applying Red, Blue, Black to their business, they improved their numbers, both in savings and revenue generation, by 28 million per annum, just in the European business, which is a 1.3 billion turnover business at the time. They then applied it across the whole world with 3 billion turnover business with similar results. So this is a massive impact in your business. We just look at everything that's to do with a client and a product, and we call it blue. So building a product, selling a product, marketing a product, taking it out to market, talking to the clients, anything to do with that, blue. What does doing blue bring into a business? Switch your mics on and tell me. Cash, I saw you mouth that, Chris, you're absolutely right, cash. So this brings in your cash flow. This is the fun bit. This is the product build bit. This is what people build products to get, people to give them money. Supporting this, we have something called the back office. So this is your accounting, finance, HR, IT, premise management, etc. We just call it red. So if blue brings cash, what does red bring? Anybody?
Cost.
Yep. So most people say blue minus red equals what?
Profit.
Profit. So I'm going to be pedantic and I'm going to get real picky with my language. Blue minus red creates a margin. What you do, please hear, proactive word do. So business planning is not a do in terms of valuation. You take your business plan to market, and if they don't believe it, they'll apply above the line and below the line thinking, and they'll decide whether your business plan has any merits. So the market won't pay you any more for your business plan. What they will pay you for is implementing it. So it's what you do with that margin that creates your profit. So we create a business model called Red, Blue, Black, and we allocate all business revenue driving activity into blue, management of the back office systems, process, and business management into red, and creating value activity into black, that shareholder value or next year's revenue. So give me some examples of some of the things that would sit in the black, that would add value to your share price or add value to your business next year. Anybody?
Brand building.
Brand is one. Yep, absolutely, says the brand specialist. So building brand in the marketplace. Yes. What else?
Joint ventures.
JV, yep.
New products.
New products. So some of you know this. So joint ventures, new products, mergers, acquisitions, bringing new product to market, opening new channels, all of those things would see an impact on your share price. Now, I'm not going to do a long exercise now, but what I want you to do when you get 5 minutes is write down under the 3 things you focus on, the 10 things you find yourself doing on a day-to-day basis, and then color code them. Joe Greenslade.
Oh, black now.
What were they when we first met?
Blue. Blue, red,
Very blue and red.
A lot of red, quite a bit of blue,
Yeah.
not much black.
So Joe produced an administration list that all her people were supposed to manage, of which was 75% red, and she was managing all of that. She was CEO of an investment business that was doing fantastic. But this is true of almost every CEO I meet. I'm working with some now. If I look at their red, blue, black mix, it's crazy how much time they spend in the red. And that's because that's the problem I bring to you to solve, because I was trained to be an architect or an accountant or a lawyer or a house builder. I didn't get trained to do accounting and finance and manage HR issues and IT problems. Somebody else can please manage that. And you're the boss, so it's all down to you. Managing partners in law firms get involved in this all the time, Andrew, don't they? So red, blue, black. So go and color code your list. You work out what the percentage should be. I've just done a new law firm we're working with has just produced their red, blue, black results. And they looked at it. It was quite funny. The guy that presented it asked the whole business to have a guess at what they thought it was. Did they think it was more than 30% in red? Every hand went up. More than 40% in red? Every hand went up. More than 50%? Half the hands went up. More than 60%? 2 hands. Red activity across every single person in that business, total red activity, 62.5% of their entire business is doing red. 35 to 37% was blue, 0.54% black. Tells you instantly they're running out of cash, they are not going to make enough money, and they're not planning the future. A shift of 5% blue activity will bring them 1 million revenue without having to do anything better than they currently do. Just move from 35 to 40 will bring them 1 million revenue. Every percentage shift in blue is worth £200,000 a year to them. We will get them to 55% blue within 18 months. I absolutely guaranteed and promised the CEO we would do that. No question. I love my job. Here's your stats again. Unfortunately, real horrible. 4% managed to get through that black hole. That's the one we fix. Happy to help anybody go through that one. And then how do I get you up this as fast as possible and build the solution to this before we get there? So the S curve is advanced managed in advance. We concertina this by planning in advance. So instead of this taking 10 and 12 years, it takes 18 months, 24 months, 36 months maximum to make this run. So we will generally halve the cost and quarter the time to do this run. In most businesses, not all, some just can't grow fast enough because the physical product takes so long to implement. Everybody happy so far? How are your brains? Anybody need more coffee, more caffeine? Everybody good? Okay, so why? Let's have a quick look at why. So let's assume we've got our 3 people, we've got our 3 skill sets. We've got a red skill set, a blue skill set, and a black skill set. And we want to build a business. We're going to start day 1. What are we going to start with? A red person, a blue person, or a black focused person? This is the audience participation part. You need to turn your mics on and tell me.
Blue.
Everybody agree we want to start with blue? So we start with blue. P1, how many jobs does P1 do?
All the jobs.
All of them, thank you. How good at all of the jobs are they? Is that a technical term again? Crap. Yeah, so they do a lot of blue. They really struggle with red. Red takes twice as long to do as blue because they're not very good at it and they don't have time to think about black. So they get busy and they want help. Who do they ask for? Red, blue, or black?
Blue.
Who do they ask for typically? Don't tell me what I've taught you to do. Tell me what they typically do.
Blue.
What do they ask for?
Blue.
I need some help doing all the stuff I hate doing. I'm a 80,000 turnover business. I want to employ somebody to come and help me. They do not ask for another one of them.
They ask for a red one typically.
They go, could you please come and help me? Now, I know some of you know the answer, so play along because you do know, because I've sat down with you and taught you this over and over and over again. They typically go, get somebody to help me out, do the invoicing, do the admin, answer the phone, make sure my appointments are done. This is a very special person. They have a very special job description. They're called my best mate's uncle's daughter's friend, who is local and cheap. Highly skilled does not enter into the job description at this stage because I'm giving up a percentage of my 80,000 to employ this person. This person says, as I get busier and busier and busier, and I start throwing lots and lots of work at this unskilled trainee, they say, I can't cope and I need what?
Another red.
And there's your business model. Now, typically at that point, if A1 goes on holiday, A2, who is even closer and even cheaper, does what?
Covers.
Goes off sick. So at this point, they go, look, if we could just get somebody in to answer the phones, we could keep up with all this filing and keep up with all this product. So there's your model. I went down to South Africa and spoke to 1,500 IFAs, and they were falling about in hysterics when I rolled this out because they're all going, oh God, that's exactly how we built it. You know, I can't believe that. I had 25 people queued up at the end and said, that's exactly my business model. Now they can afford that because they make a lot of money as an IFA. If you're a barrister, you can afford that because you can make a lot of money from your delivery. So there are certain business models, this works fine, but guess what? It's not scalable. It is the four-man business because what happens next? Who do I add next to this model? How do I grow this business now? Who do I add?
Blue.
Blue, and red says what?
I need another
More
red.
help.
Busy.
Just doubled my workload. We can't cope. So I walk into, imagine, and I've accelerated this number up for a business recently and said, let's grow your business using this model and see where we get to. And he got up to 12 blue and 36 red. He went, well, that won't work. It was just no money. I said, but you can't scale this business. It's stuck. Now, there's a lot of what I call lifestyle businesses that this works great. I pay 3 people to make sure I don't have to do anything I don't do. It's not a bad team if you're a big rainmaker and your product is high value. If you're a $5 a day consultant out in the marketplace, this works fine. You need 6 clients and you can pay these 3 people and you don't have to do any real work. So it's a model that gets repeated again and again and again and again. If we were going to do it differently, what might we do if we genuinely knew this is design top down and build bottom up, as opposed to iterate as we go? What would we start with? Red, blue, or black? Somebody tell me.
Black.
Anybody? No. You start with blue again. The person who usually starts a business is a product person, so they know what they're doing. They're an accountant, they're a law firm. Very seldom do strategists who just think about the future and where we could go make any money, because they go bust in the first year. Now, that doesn't mean to say there aren't black focused businesses out there. They go raise 250 million from the city. They go and try and think about it, and they sit on chairs in rooms full of whiteboards and they iterate stuff out. And when the 250 million's gone, they've got nothing. So I want always a minimum sellable product, MSP, minimum sellable product, or an MBP, minimum viable product. Viable doesn't mean anything to me because there's no money attached to it. So blue, I'm a blue coach. I work on the blue section of businesses all the time, getting people to the money. If I want to grow that business successfully, what shall I add next?
Another blue.
Who needs any management there? Nobody. If I don't answer the phone, guess what? It must be you. If the door's not been locked and I've gone home, guess what? Must be you. No management needed here. We both focus on blue. We both manage our own red. We're both rubbish at it. We're probably running 35, 40% blue, 60% red, just trying to cope. We'll worry about the systems down the road. Who do I add to that team next?
Blue.
Good. Now, any management needed?
No.
Yes, exponential growth in complexity in this business model. Is it you? Was it? I just thought, oh, I thought it was them. Google, if you can't find it, I'll send it to you. Somebody, anybody, everybody, nobody, and it will describe this business perfectly. It's hysterical. If it looks a bit like your business, give me a call. Somebody, anybody, everybody, nobody. There's tons of them on Google. You'll find it. What would release this team to absolutely smash it and focus on growing exponentially?
Red.
This time though, highly qualified, highly skilled, highly competent red, top quality, because the amount of additional blue on 3 good blue people just went from 30% to 75, 80%. The exponential increase. Now, let me give you an example. I worked with the sales team at Sony first. We did red, blue, black. 8 salespeople, 1 sales manager, and the head count was 0. They had no head count. They wouldn't let anybody else join. And they worked out how much red time they were spending. So they got themselves, they employed an external virtual PA. It cost them less money than 1 salesperson's following month's bonus to pay for that virtual PA for 1 year. The increase in sales for that team across the whole team was 2.8 million the following month. They had just released Bond, which did help, the first Bond movie. But the point was exponential increase in their front-facing activity. One of the blue team, they all used to produce this fancy PowerPoint that they had to present at the end of each week. One of them was really good at it. All of them used to take 3 to 4 hours to do it. So he said, look, I'll just create a template and give me all your data and I'll do it. And in 2 hours, he used to do what used to take the entire team 28 hours combined. So by just red, blue, black in that team, we were able to create almost a 45% increase in sales. They had an 11% increase in market access, market ownership in a shrinking industry at the time after we applied red, blue, black across their whole sales team. So it's a massively powerful model when you use this. Now, interesting, there are some numbers that work and some that don't. This is again fascinating to me. So a team of 4, this is one of the most profitable businesses, but the owner of the team, P1, has a very specific job. It's about 80% delivery. So this is a typical small boutique, highly profitable team working on its own. If you take it up to 7, the 750 black hole is 7 to 8 staff. So if I grow this team, I'm not going to do the maths now, but I can just tell you simply, to grow this team, I add 1 blue and red says can't cope, so I need to add a red, and I've just changed my ratio from 3 to 1 to 2 to 1. My management goes exponential, and when I hit 7 to 8, it's all over the place. It doesn't come back into profitability again until 12, when I get my ratio back. Now, the CEO's job in this team is completely different to the CEO's job in the 4-person team. Does that make sense? So a completely new skill set needs to be learned here. And in some cases, highly blue skilled people like vets, doctors, architects say, I don't want to run the business. I want to go and be one of those blue people. And they employ a practice manager. Practice managers and entrepreneurs, do you think they think the same? It's not a complicated question, it's yes or no. Do practice managers think the same as entrepreneurs? No. So what happens is the owner of the business has to keep telling the practice manager what to do, which means the practice manager goes, well, why would you employ me to run the business and then keep telling me what to do? And they leave. So as long as the CEO understands their role has to change when they move to this size team, this team makes a load of money. And here's an example of the types of numbers that work. The black line represents the cost. So in manufacturing and service, 7 doesn't make as much money unless the product is absolutely massively expensive. 4 works great, 7 doesn't work as well, 12's good, 17 doesn't, 24 works. As you go down to 28, you can start to get some profitability, but as soon as you dip to 33, it stops again and back up to 48, all the way through. I'll do those numbers all the way up to 600,000 staff if you want, by just looking at how teams are structured. Again, the mix of red, blue, black decides how far away from this break-even line you are. I have plenty of examples where people said, oh, well, my business is perfect. We've got 22 blue and we've only got 2 red. And when they do the analysis, they find out what are blue people doing a lot of? Red. So that's an add red people to reduce red. And in some businesses, I got 6 red people to 6 blue people, and I have a problem. So what you've got to think about with red, blue, black is this is a way of designing the right number of players for the game, making sure they're all in the right positions on the field, making sure they're all doing the right activity brilliantly. And what you've got is Premier League winner. Does that make sense? Anytime one of those things is out of kilter, I've got 12 people on the team, but I've got 6 goalkeepers and 6 strikers, doesn't work. 1 too many people. If it's an 11-man football team, it's 1 too many. Or I've got 8 strikers and 2 goalies and 1 winger. Doesn't work. I've still got the right number, but they're in the wrong position. If I've got 12 people on the team and I've got 6 red, 6 blue, I know my number's wrong. If I've got 8 red, 3 blue, 1 black, but when I do my analysis, I'm doing 50% red activity, 50% black activity, I know I've got the right people in the right position doing the wrong things. If I've got the right people, 12 on the field, I've got 8 blue, 3 red, 1 black. I look at my activity, 70 to 75% blue, 20 to 25% red, 5% black. I'm doing the right things, but I'm only turning over 60,000 a head. I'm no good at it. So I need to improve my quality. Is this making sense? So this framework allows you to find exactly where the problem is in your business in 2 minutes flat, go in and work on what needs fixing. Now, the truth is it's never one of the 4. It's always a little bit of all of it, and you've got to fix it in order. So let's get the ratios right first. Let's get the team structure right first. Then let's look at their activity and improve that. Once I've got them doing the right, let's train them to do it really, really well. Hi, Guy, you obviously dropped off. Let's let you back in. Is that interesting numbers? Some of you have seen that for the first time. Some of you have seen that before. Yep. Happy? Any other quick questions, comments, thoughts? Yep, Gareth.
Nick, so I was looking at the jump model that you had up on the screen earlier. Going from 4 staff to 12 staff, that's quite a big jump for a small business.
Yep.
How do you go and propose doing that? Do you just go out and, right, we just need to hire some blue people and put them into the business? If I look at my business and where I'm at and wanting to do something like that, it gives me sweats in my head.
I'm just designing a strategy for somebody else who's in a startup space to say, look, can you help me design what this looks like? So look, let me answer it this way. If you and I decide to start a coffee shop and we just go, oh, there's this shop around the corner that's free, let's go start a coffee shop. And we'll go and buy a machine and you'll nip down the shop and get some cups and sauce and I'll go and get some furniture and we'll start a coffee shop. And it's blazingly successful. We go, oh, we should open another coffee shop. Now, the moment you go and open that other coffee shop, what you're trying to do is duplicate what we've done here. But now can't get that furniture anymore. Can't get those cups and sauces. And that coffee machine we got on a discount, we can't get that. And we can't kind of replicate it. So what we do is we take 2 that are slightly different. And what we don't get is any leverage of scale. And by the time we get to our 4th coffee shop, we're running out of the ability to make it work. If that makes sense. Now, if we thought, you know what, we want 24 coffee shops, how would we make our decisions differently as to that first purchase of that first coffee machine, and what would we do before we got the next coffee shop up and running? We do all the learnings in the first. So when I talk to somebody and said, do you want to build a boutique team of 4? So I make a lifestyle choice with people. Now, when I'm first working with clients that are building a business, there's a lifestyle choice. Here's what a boutique team could look like. Here's what you would need to do. Don't get to 7 and stop and go, oh, I don't like this anymore and go back to 4. Make a choice to go to 12. And what you would then do is you build 3 teams of 4.
Yeah.
So you replicate it, but you replicate it with the knowledge that you are going to move. Because I can tell you, 2 people running a business does what, by the way? 2 people driving a car, how's it go? Those of you that sit in the passenger seat, how's it go when 2 people drive the car?
Not well.
Oh, wow.
Yes, I got the steering wheel, you got the brake and the accelerator. I'm going to drive my eyes closed, you're the eye. It's a mess. So you can't have 2 people. But when you know you're eventually going to go to 1 person running teams, if you like, then you are able to change the trajectory of how you grow. So typically, now the second thing you do is there's times when you go slow and times when you go fast. I haven't found a business owner yet that has fully understood go slow at certain times and slow, because we love growth. We love add 1 more person. Let's keep going. Let's keep going. And we keep running businesses with low profitability run rates because we never build a system to maximize the efficiency. That's the first problem. Second problem is I work out how to make that business efficient and I don't worry about the huge, great big tub. So the systems and processes I put into that business won't work at the next business up. So it's all about that time, that investment in creating the structure for the business that's going to be 12. If that makes sense. So you really need to know you're going to go to 12. This is like the stepping stones. If you know you've got 2 stones that sink fairly quickly, you need to go through those quickly to get to the 12-person stone that's nice and safe. Then you need to go through 17 quickly and get to 24. I tell you, the number of businesses I've seen go 12, yay, 13, 14, 15, 15, back to 12. And I see them go into that no man's land. They don't realize 24 is the next number. So they get 17, 18, not making any money, go back to 12.
Can I make a comment?
Go on.
So I think Gareth was questioning about how do you get from 4 to 12? There has to be obviously investment at some stage. So you've got your 4, you know what your strategy is, you know you want to get to 12, but at some stage you've got to say, well, actually, I'm going to have to put some money into this to get to employ these extra people. They don't start to produce immediately. It takes time for people to begin to produce revenue. So you have to be prepared for that drop in the short term, don't you?
Yeah, so and there's 2 ways to do that, Andrew. One is you go for external funding, and I've got one of my clients at the moment that's looking for external funding to grow. I always have a slight issue with that because it's never real to me as money you've earned and put in the bank, but nonetheless, it works for a number of businesses. The other way is just to hold at a highly profitable point, which most people struggle to have the patience to do. When you're on a fast trajectory and you're growing quickly, you've got 4 people, you're making plenty of money, and you can actually afford the next person. But if I normally sit with people that are doing that and say, can you afford the next 4 right now? Oh, no. How much money would you need to have in the bank to afford the next 4? And then how quickly can we get them up to speed? So it's about a timing strategy. How fast can I get to maximum profitability at the right number? How long do I hold? So it's growth, flat, growth. Guess what? That's exactly what the markets do. They grow, they flatten, they grow, they flatten. So if we grow businesses in the same way, grow the capacity, fill the cup. Grow the capacity, fill the cup. And you start to set percentage efficiency numbers in your cup that create enough revenue to pay for the next cup.
Yeah.
That makes sense. So sometimes you have to go for external funding. Sometimes you have to provide the internal funding from yourself, which is very often just slow down and stay at this profitable space in the full knowledge when we've got 500,000 in the bank, we can employ those 4 people and we've got another team when we're off and running. But Andrew's right, it's an investment. Where the money comes from, I always prefer to create it myself, but that slows things down. When do you apply a fast strategy? When the market gives you the opportunity. So there's going to be a lot of fast strategies applied next year.
I have a question, Nick. It's just a quick one. It's more to do with the vision of the business for the future. Do you think the whole working remotely, flexible working hours, working from home, do you think that should be a part of the vision for a business? And do you think we should be planning based on this, or do you think things are going to go back to normal?
Look, I think based on that EY-S curve, that there is going to be a major change. There are going to be some things that just won't get put back in the bottle. This genie is out. And I think if you look at the number of businesses that were looking at remote working before, but they weren't really giving it a proper shove. You know, they'd let somebody go home for the week. If you remember what that first week of lockdown looked like, it looked like bike rides and walking in the park and taking the kids out and slumming around in your shorts. You know, you didn't get out your pajama bottoms. Like there was. Now, if that's what the normal first week of letting somebody go to work from home looks like, then business owners and managers go, I'm not having that. And they felt they were out of control. When we forced them to have no choice, first week was a nightmare. I mean, literally, I described the first 4 weeks. First week was, second week was, third week was, no, this is not. Fourth week was, right, now let's reorganize. And by the 4th week, everybody's going, this is amazing, this is fantastic. Shame we just signed the lease up. You know, glad we just changed our lease. Like it just changed people's views, but it took 4 weeks. How many people in the old world ever gave somebody 4 weeks working from home as a trial? And how many forced the whole business to do it? So I think this has forced a different way of working. I just don't see flying into San Francisco for a 4-hour meeting and flying back again ever being back on the cards. I mean, we've run some meetings with all hands meetings. We ran one for Andrew's team. We've just run one for another business. 85, 90 people in the meeting room. None of the 2 clients I've just recently done that with have rooms big enough to do that. So let's go out to a hotel and pay a fortune and $5 grand and let's not bother. Now you can do that monthly.
Can I just jump in?
Yeah, sure.
Yeah, what I've found, and I've been dealing with a lot of international companies, particularly in the last 6 to 9 months, is that coronavirus has kind of legitimized what they wanted to do anyway. So it's given them the perfect excuse to operate in a remote environment, to manage to group people together. Yep. So nobody's going to say this out loud, but some people are going, it's been an economic and logistical blessing for them, so that now it legitimizes what they've always wanted to do.
My model, Christoph, I think we're going to come back to a once a quarter. I would, because I love to shake somebody by the hand. I love to watch 10 people in a room because I see something completely different. You know, in my world at the moment, none of my clients have got any arms. So, you know, I'm kind of going, or legs, or, you know, I don't know whether they're into shoes or not. I have a shoe collection that's to die for, and I haven't put a pair of shoes on for 9 months. I'm like, what the hell? Yeah, I can't do with that. So I want to get back into the field, but the likelihood is it'll be quarterly. Once a quarter, we'll go catch up with the team. I just don't see us going back to full face-to-face in the field, driving around the country in cars and trains, and I just don't see it coming back.
So do you think that's going to affect how businesses communicate credibility? Because normally when you have a new client, they want to come and see your offices, they want to meet the team, and it's just the whole due diligence process. How is that going to be? What replaces that?
Well, you know, it's funny. I hope Trevor won't mind me sharing a story, but the first time I met him, and I'm going to share a bit of who he is. He's the managing partner, I think, of EY up in Newcastle. Huge department up there, one of the biggest in the world of tax specialists. So I'm being introduced to him by one of the top IFAs from London, and I'm thinking, Zoom dress code, what do we do? And I'm thinking, and I'd just come out of the gym. I had a green Perth Rutchy gym shirt on. I'm thinking, I better go and put a shirt and collar on because Trev's bound to show up in a bloody suit or something. And I know my IFA will. I rock up. I think he had a Led Zeppelin t-shirt on. I had my Rutchy t-shirt on, and James from the city had a gym t-shirt on. And I went, and it didn't matter. Now, I reckon if I'd rocked up to his firm up in Newcastle, he would have been in a suit, and I would have looked very out of place in a pair of shorts and a t-shirt. So, you know, I think it is going to change how we do business. I think credibility is going to have to be delivered by value given, not by the flash office you sit in. There is a recording of this. If you really want to listen to all this again, you're welcome to. I've been more than happy to send out the EY slides to anybody that asks for them. It is public domain stuff, so you don't even have to ask me. If you type PDF, Trevor will tell you it's on site, so you can go and download it now. It's a brilliant, brilliant, brilliant read. Do watch Kiss the Ground, whether you like Woody Harrelson or not. It's a fantastic and interesting, especially if you garden or you know anything about plants. You know, and my belief is if we all make the effort and we all have a go, we will change the world. We won't do it by sitting on our ass and just ignoring it. So look, thanks once again for tuning in and listening. If you know anybody else that needs to rock up to one of these, let them know. I had a couple of invitees from clients. And anything you want help from us, even whether you are a client or you're not a client, and it's just triggered something, then poke your coach and go, oi, you didn't tell me about that, or ask me, and or come ask for help. We'd be more than happy to assist.